Hi investors, Joe here. It is Monday again, doggone it, and we've got a long work week ahead of us. And the market, as you know, has been tumultuous. And right now it is time to have precise entry points and tight stops and small positions. Let's take a look at the 1-year Tesla chart as usual. And let's look at this little shelf that it's been making and talk about the buy point that we're hoping to execute today. It didn't happen, and whether we can still do that or not. And while we're talking about shelves, I might as well give you a crash course on low cheats and handles and high handles. I'll try to do that in a couple minutes. I really need to dedicate a whole video to that, however. And then if you're still with me, let's talk about the industries that are working. There are some that are working right now. I just want to make sure you are aware of those. And let's talk about market bottoms one more time. Let's see if we can do that in 10 minutes. I kind of doubt it, but we'll try. I'll try. Before I do that, please remember that this is not financial advice. This is just for entertainment and for education. And if you want to support my channel, there's a link in the description below. You can buy me a coffee. So here's our 1-year chart of Tesla. Here's the 9-month base, the big breakout with the third quarter earnings, and this bucking bronco action descending into a descending triangle. And here, my friends, is the shelf that we've been talking about. And I talked about putting a buy in place above the shelf, and I'll talk more about that in a moment. Bad news is the stock fell off today. It tried to break the shelf and failed, and it closed near the bottom of its range, near the bottom of itself, uncomfortably close, bottom of the shelf, uncomfortably close to 900. Good news is the volume fell off, and we do want to see volume tightening up before a potential breakout, although this could be a potential breakdown. So let's talk about shelves right now, and then we'll talk about making a play on this one. Okay, now here's your typical shelf. And it's actually a bearish pattern, and we normally don't want to make a play off of it. This is Cronos, C-R-O-N, one of the mini marijuana stocks that has taken it on the chin. And we see after an extended pullback, we see an up move, and then we see some sideways action, and it starts to tighten up. So the reason we normally don't want to make a play off of this, why we don't want to buy a breakout of this, is because you have all this overhead supply. All of these buyers are mad as a hornet, and as soon as it breaks out, these guys are going to start selling for even money, and some of these guys might panic and sell for a loss, and it's going to be tough sledding. And sure enough, as often happens, this shelf broke out to the downside. So shelves are usually a no-go, but with Tesla, we might try to make an exception. I'll talk about that more in a minute. But first, let's talk about a low cheat. So here you see a pretty decent base here. This is TRGP, Target Resources. And right here, okay, I just highlighted it for you. Right here, you see what's called a low cheat. Now, how is a low cheat different than a shelf? Well, there's much less overhead supply on the left side here, and the base is shallower, and it's wider, longer in duration. That gives it all three of those things give it a much better chance of succeeding. And as you can see, on the breakout, it did a quick shakeout and shook out some shoe clerks, but then away it went, right? Now, if we go back to Cronos, as you can see, you've got all this overhead supply. The base is very short. So this is a shelf. Generally, we don't want to play those. And this is a low cheat. This is something we could try with a tight stop. Okay, so let me talk about handles and high handles. So this is Bill. You got a nice even atom double bottom. And you got a cup here, like so. And as you can see, it's carved out a traditional handle. It's pausing, it's gathering momentum, shaking out the weak hands. There's no overhead resistance up here, right? There's no overhead supply. And when it breaks out, it has a good chance of working. And sure enough, it did. And it built right on top of it a high handle. And so we can buy breakouts of handles and high handles with, in a decent market, pretty good success. And then you set it to stop at 10%, or in this case, maybe right beneath the 50-day exponential moving average, which brings us back to Tesla. So here's this little shelf, and like I showed you with Chronos, usually you don't want to try to go long off of a shelf. You've got all these trapped buyers, all of this overhead supply. However, we have to, that Tesla is not an ordinary company. You have triple-digit income growth. You have 50 or 60% revenue growth. You have 2 gigafactories about to come online. You've got a very dynamic CEO. So it is possible that this shelf could be our market bottom, particularly because it's right at support at 900. So here's our play. So we're sitting down here at 907. If Tesla closes above this yellow line, which is 936.5, then we could go long as long as it's not too far extended, and then we would set a stop at 881.15, which is right about here. So the reason we don't want to go long intraday is it may go above this line and then pull back, and we want to maximize our potential and minimize our risk. So let's wait until the very end of the day, or even after market close, and if it closes above there, then we go long. We have a pretty tight stop, and therefore we have a decent chance of catching the bottom or close to the bottom if this is the bottom, and we just get a little haircut if we're wrong and it turns south and heads beneath 900. So this is a very aggressive play and kind of a risky play, and if you do try this, I would only do a small position until we see confirmation. And then if it starts building up the right side, if we're right and it prints an up candle and we get in there and it starts carving up this right side, then we can add to our position when it makes a cheat, right? When it makes a low cheat, or when it makes a high cheat up here. But we'll worry about that one step at a time. So basically we are in a holding pattern as long as it is still oscillating here. If it breaks beneath, if it closes beneath on strong volume, if you are a short-term holder, you really should consider selling if you have less than, say, a 15% loss. If you have more than a 15% loss, then you have to really look at the man in the mirror and tell yourself you're never going to do that again. So Tesla's a hold right now, and we will see what tomorrow brings, and maybe we'll make that move. There are some industries that are working really well. Oil and gas has just been on fire since, I think, January 4th or something. Now, some of these stocks are getting pretty extended, so don't FOMO in and buy something that is way above its pivot point. But find yourself a list of oil and gas stocks and go through. A lot of them are in nice spaces or just getting really close to breaking out still. Some wood suppliers are doing really well. Some of the financials are perking up again. And I think Goldman Sachs, if I remember right, and Morgan Stanley are both looking pretty good. And then a few of the shippers, it's kind of hit or miss with the shippers, but one of my shippers, Zim, has just been doing fantastic, and some of the other ones are perking up. So there is money to be made right now. I would recommend you take a look at these industries. And my last thought is just for all of us to remember the market bottoms are a slow process. With now these last couple, the COVID crash in 2019, these are kind of anomalies, and we see a V-shaped recovery so far with this one. But ordinarily, you have some retests, right? Here's 2016. You had a retest. You had 2 more retests. Here's the 2008 bank meltdown. You had the crash. You had a sharp snapback. You had another retest. Here's the end of 2002 and 2003. It took 2 retests of the prior low to mark the market bottom. So let's be, like I said, really cautious, although we would love to see a V bottom carve out like the COVID bear market, it's more likely that we're going to get multiple retests of the prior low and maybe even a move beneath it before we're done with this dismal market conditions. Those are my thoughts, and it has been 10 minutes. Please let me know what you think of any of these ideas, and if you could like and or subscribe, I would really appreciate it. Take care, everybody.